Okay, so good morning, everyone. We are Friday, January the 24th, 2024. Let's immediately just see what's going on overnight. Okay, well, first of all, let's just see what's happening today in terms of the data. Not a huge amount. First thing I would say that at 10 o'clock, we have the University of Michigan, which is the final reading, so it's not that important for January. The other thing as well is that it seems that at the moment for the expectations and inflation expectations, that's very much divided. The response is very much depends on which political affiliation one adheres to. So a lot of people are not taking this that seriously at the moment because it seems to be very politically divided. We'll see what happens in a few months. Maybe it's probably more important. It's going to be the S&P Global's manufacturing and services PMIs coming out here, as you see in 9:45. That's a preliminary number for January. So that's going to be one of the first, not really a data point, but a survey just to see about, how business, purchasing managers in the US are sort of feeling about the economy. There's no reason to expect this to be weak. And so what we're looking for here is just to see if this sort of trend of strength in the US economy and confidence in the US economy continues. So let's look at that. You can see here the numbers expected just slightly below into contraction territory for the manufacturing and pretty into positive expansionary territory for the services at 56.5. We shall see. Okay, so overnight, I mean, basically yesterday we had, it's just interesting to see the trajectory of Trump. Clearly, and there's two ways to look at Trump here. Either we could say that he is, ill-disciplined and shooting from the hip, or, we could possibly say that he has a strategy of, deliberately keeping negotiating partners off balance. Anyway, yesterday, just to look at some of the sort of the headlines and what he was saying yesterday. Yes, I listened to the sort of the speech, the virtual speech he gave to the Davos Economic Forum conference, and he said just a couple of things which got my attention and I think the market's attention. He said that he wants a lower interest rates. He would consider talking to Powell about getting interest rates lower, and that he thinks that the Fed will listen to him on interest rates. So the first thing is that definitely the market quite liked that. The stock market, there was an initial little pop on the front end of the curve on the bonds, but definitely we can see that the politics are starting to heat up and that Trump definitely wants a sort of lower interest rates and will probably start putting political pressure on the Fed. We shall see if Powell responds to that. We know that in the past, Powell has been pretty strong about, avoiding political pressure or resisting political pressure. But generally, we know now the tone is that Trump does want to get inflation down and he wants to get interest rates down. So part of his policy to get inflation down is to reduce oil prices. So it was interesting yesterday at Davos. He did sort of basically say to OPEC that OPEC needs to reduce their production output. That's a tricky one. So oil went down on that. I mean, I thought it would have a little more downside, but it seems to have stabilized this morning. We'll look at the chart. But the thing is that OPEC, there's a lot of factors there which we won't get into, but I'm not sure that OPEC will immediately sort of open the spigots because they know already they've been trying to, for the last year and a half, have a lot of discipline about not overproducing. And we know also at this point that the Saudis do not actually export that much oil into the US. And so I think that's going to fall on deaf ears, his appeal. But definitely, Trump is trying to sort of talk up a sort of lower sort of energy prices. And I think he'll achieve that with nat gas because there's definitely a huge global demand for nat gas. The US is producing a lot of nat gas. It's capable of producing even more. And with the AI revolution and all of these data centers, they need a huge amount of sort of energy, and a lot of them are geared towards using nat gas. So I think the nat gas equation is positive in terms of what Trump is saying. But in terms of crude oil, I'm not sure at all that the Saudis or OPEC Plus in general, the Russians, want to produce more. I'm not sure that even US oil producers want to produce more. Everyone needs an equilibrium kind of price, especially as global growth is, relatively flat at the moment, except for the US. So that's an interesting one. We'll look at that in a second. So basically, he wants lower interest rates, lower oil prices. And then in terms of tariffs, he gave mixed messages yesterday because at Davos, he did actually, sort of talk for, 30 seconds or a minute about Canada. And he reiterated the fact that Canada was very unfair. And he repeated the fact that by, by February the 1st, he wanted to impose tariffs on on Canada and Mexico. But we didn't really see a huge reaction from either the Mexican peso or the Canadian dollar. So I think we're at that point in the cycle with Trump, which I observed, in 2016, 2020, where his bark becomes worse than his bite, and people start treating him like the boy who cried wolf. He keeps on saying this and saying this, and it doesn't seem to be part of a coherent policy. And so we're getting less and less a reaction to that. However, the fact remains that, February the 1st is 1 week away. And he continues to say that, he's interested in, in putting tariffs on those, especially those two countries. I got a sense of less in Europe. I think his end game in Europe is to get Europe to buy more nat gas and maybe more crude oil. And then in terms of China, excuse me, have a bit of Earl Grey tea. In terms of China, um, he basically said at the Davos thing that he wanted positive relations with China, and then later in the day, so yesterday evening, he said his first, he didn't actually want really to have to put tariffs on China. So quite a lot of positivity with China. I think he's trying to sort of almost be a bit more sort of a bit harsher with sort of Canada and Mexico. The European Union is somewhere in the middle, and China, I think his preferred point of view is just to say, hey, China, like do something, buy some, sort of grains and soybeans and oil and products. So interesting what's going on. It's difficult to trade it because you're getting little headline pops for 10, 20, 30 minutes. Sometimes that move is being faded, pretty quickly, sometimes not as quickly. I guess we'll just have to see. But the market is definitely taking away from the tone that Trump is a little less aggressive with tariffs, and that's translating into market action, I guess. And so what we can see, let's start off just looking at the U.S. dollar. The U.S. dollar in the form of the dollar index, the Dixie, which of course is quite Eurocentric. But if we look at the dollar index, we can see here down 48 basis points today. You can see here red candle. So I thought it might hold at this horizontal level here, which was a little bit, essentially about 108. But basically, it's broken down towards that. So this is quite interesting here because we have broken down. And this is quite a key moment here because we're this sort of pink box here, which goes back a long way. This was the trading range for quite a long time. As you guys can see here, this is a daily chart. So we were rejected that and we've gone back up, but basically we're now at the 50-day moving average, exponential moving average here. So this is a point where does the US dollar just bounce around here at the top of this range, or does it want to actually go back down and test into this range? Or will this be a false breakout on the downside? And to be honest, probably not a huge amount will happen today. We don't have a huge amount of data or many geopolitical events. I mean, there's always possibility of a headline from Trump. But next week, of course, we have the Fed. We're getting close to that February the 1st, sort of, supposed deadline for sort of tariffs. And we have quite a lot of economic data, more tier one economic data. We also have the PCE next week. So it's going to be interesting to see what happens here. Is this just shaking out a little bit, long liquidation of some of those weaker longs, who have been late to the party? But definitely the mood overall is to say, hey, Trump's just talking and talking, but the reality is he wants to deal. He's not going to unilaterally impose, 30, 40, 50% sort of tariffs. So the dollar coming down. So what that's meaning is that we have euro having a nice pop. So the euro here, this is on the futures. Not the spot market, but on the euro futures, you see above this kind of resistance area, which is about 104.8, something like that, just going above the 50-day moving average. And a lot of that was to do with the Trump and tariffs and a bit of mood. But also we did have the flash PMIs for January, which I'll just bring up here. We had those early this morning, our time. And if we actually have a look at them, I mean, I think we need to keep everything calm here. There's been a lot of misery, a lot of bad news priced into Europe. So if we look here at the PMIs, the market got a bit of a bounce because they were higher than expected. But if we look here at Germany manufacturing, we can see that expected was 42.7 and it came in at 44.1. Okay, so that's higher than expected, but it's still in contraction territory, but hey, a little bit better than expected. But what we did see, which was, much more positive, was German services, for example, expected at 51, came in at 52.5. So that's definitely in expansionary territory. In France, 45 instead of 42, and then for services, 48.9, 49. So France still not great, but Germany flickering with a little bit of life. Again, I think this is a reaction against a lot of the negativity which has been priced in, because these numbers in and of themselves are not stellar. But you could say that services was relatively strong, and you could say that manufacturing, at least it's trending upwards. So who knows, is the worst over? But the bottom line there is that we got the bunds selling off a little bit, so we have higher yields in across the bond space, which we'll look at in a second. But definitely in the currencies, we see here the euro up. We see the pound doing okay. We see the Swiss franc, well, not so much, but we see the Aussie dollar up quite substantially, 43 basis points. We see the New Zealand. Keep in mind that the Canadian dollar is up, but you see here it's underperforming quite a lot, the New Zealand dollar and the Australian dollar, so only up 11 basis points. So you see that the Canadian dollar is still, the market is nervous about the Canadian dollar and still sort of fearing that the tariffs still could come. So the Canadian dollar is sort of the whipping boy for any weakness, and it's not really rallying when it could or should, and when there's bad news, it definitely is falling. So that's kind of an interesting one there, definitely underperforming. What also is interesting here is the yen. So if we have a look at the chart here, funnily enough, sorry, I have something in my eye here. Sorry about that. If we look at the yen, we had the BOJ last night. So the BOJ hiked as expected, because that was about 95% priced in. So the Bank of Japan did hike 25 basis points. And we can see here, if we look at, I think I've got the 10-year yield. Let's have a quick look. So obviously the 10-year yield, this is just on the tick chart, so very short term, but you can see here the 10-year yield going up. So now at a point where in Japan, that's actually starting to yield something 1.23%. So gradually, the yields in Japan, which were negative for such a long time, they're heading upwards. And that's put globally this morning a little bit of upward pressure on global yields. So we had those reasonable PMIs in Europe, and we had the BOJ hiking. So global yields are up a little bit. And what's interesting here is that well, first of all, there's a couple of things which are sort of interesting is that the US dollar overall did not react too much. But probably more to the point is that the Japanese yen, you can see here initially on the hike, it had a little bit of a pop, but it gave it all back very, very quickly. And in fact, is down on the day. This is the daily chart for the Japanese yen futures. So you can see the Japanese yen here is down. And that's it's kind of interesting here because Ueda at the press conference also was relatively upbeat, saying that he expected at the spring negotiations for wages, the wage negotiations, which will happen kind of in March and April, he's expecting that to be quite promising, in the sense of more wages, which is a bit more inflationary. He was relatively upbeat on the economic forecast. So Ueda was, I don't want to say hawkish, but just reading through the press comments, he was a little more than neutral. So the market was expecting something neutral, but he gave them a little bit more positivity. And so forward guidance now also pricing in another cut later in this year. So I just wonder at what point, when and if the Japanese yen might get a little bit of a bid, because for me, this was a slightly odd reaction, but that's against the US dollar, of course. And if we look at some of the cross pairs, maybe that's really a place to start looking at Japan. So if we look at, let's say, the pound. So you see here, for example, the pound actually outperforming the yen. So the yen, yeah, the Aussie dollar outperforming the yen. So that's interesting to me because especially if we do get tariffs or any kind of trade war, I think the Japanese economy seems to be picking up a little bit. Inflation seems to be picking up. Monetary policy is starting to diverge in the sense that the BOJ is one of the only major central banks in the world which seems to be actually hiking. The others are either on pause or perhaps even cutting. So if we do, and it could be some safe haven flows if we do get any kind of global tariffs and global trade wars. So interesting to look at the Japanese yen. For me, on that one, the other thing I just want to look at here, guys, is oil. As we say, Trump yesterday did make some comments saying that he wanted OPEC plus to sort of pump more and basically get the prices down. We'll see about that. I think that's a complex one. Maybe we'll look at that in another video. But basically, the oil price did go down. But what you can see is that since last night, the beginning of the session, this is the CL1 futures. You can see on this Fibonacci retracement, which basically goes to this impulse. If we go all the way back here, the 50% Fibonacci coincided here with the 200-day EMA. So I guess some of the algos and CTAs, they thought that was a pretty good entry point here. There definitely is a little bit of support there, so it's bouncing. We'll see if this continues. It's a very evenly balanced market. There's reasons to buy oil. So the reasons, well, there's a little bit of a technical retracement reason here. Reasons to buy oil, you can say that, the Chinese economy maybe is flattening out and there's still reasonable demand. OPEC Plus is continuing to show a little bit of production discipline, so they're not overproducing. You could also argue that potentially the sanctions with Russia will continue. There could be potential sanctions on Iran, potential sanctions on Venezuela. So they're the reasons to be positive for oil. With a slightly weaker US dollar as well. On the other hand, you could also say that there's still a very significant amount of spare production capacity in OPEC, apparently about 3 million barrels per day. We don't actually have, real news on any potential Iran sanctions. One could also argue that the sanctions recently put on Russia, there's going to be workarounds, and they're starting to, gradually find other oil tankers to transport their oil. And one could also argue that growth in Europe and China is not great. And so therefore demand is not really expanding. So it's an interesting market. I would say relatively balanced at this point. And if you throw in the fact that Trump is trying to get the oil price down and trying to get people to produce more, maybe there could be a little bit more extra production, which could depress the prices. But I think what seems to be happening here is that oil doesn't really want to go down and collapse. On the other hand, it maybe doesn't see too much of a need to go above, let's call it $80 or so. So we could see some sort of range trading here, $4 or $5 kind of range here over the next few weeks until we get a bit more clarity about US policy in terms of Iran and Venezuela. And let's see if there's any reaction from OPEC to Trump's comments. OPEC Plus is meeting, I believe, next week. We'll see what's happening there. Other things, just want to have a quick look, getting a little bit late here, is the metal complex. We see that gold continues, it's very bullish. It's broken out here. What can I say? It's above all its EMAs. It looks like it wants to test the highs up here. This is the front contract for the futures. Listen, anytime that inflation is sticky, there's still the fear of uncertainty, geopolitical uncertainty, and potential inflationary pressures coming from tariffs and whatnot. Gold is going to get a bid, and we know that a lot of non-US central banks, especially places like Russia and China, and India, are buying gold. So at the moment, that's breaking out. What has been lagging recently was silver and copper, but you can see here this is copper here. Copper breaking out, looks like it bounced off this there was a bit of a cluster here of moving average support here, the 100 and 200-day moving average, and the 50% retracement. But I think a lot of this is on a slightly weaker US dollar, and probably most importantly, the fact that Trump's rhetoric, his public rhetoric towards China, has been on balance less hawkish than feared. And so basically, I think this is giving a little pop here to the industrial metal space, specifically copper, and also a little bit we're seeing here in silver, which has sort of more applications for renewable energy and industrial applications. Although, of course, we know the Trump administration is not a fan of renewable energy, but the reality is globally, things like solar panels will continue to be made in large numbers, large quantities, and silver is definitely a part of that. So just before we leave, let's look at equities. Equities enjoying this less aggressive Trump. We have the VIX, basically very, very flat at this point. So no particular problems there. We also see the MOVE index, which is volatility index for the general bond space, down. So that's always going to be supportive of equities. So basically what we're seeing here is that they're pretty much a risk on. We see the ES hitting new highs about 6,150. Let's see if it just wants to pause there a little bit, but very strong. We see NASDAQ also strong. Let's have a look at the Russell. I have to say I haven't looked at that yet. Yeah, Russell, not bad for the Russell. And we see just a bit of risk off. We see that a risk on, I should say. We see that the bond space in the US not really moving a huge amount, but just coming off a little bit. So pushing up the yields a little bit. There's the Z5, ZF, and then the ZN, the 10-year, just coming off a little bit. So pushing up the yields a little bit, getting a little bit of bear steepening on this idea of more economic growth and maybe interest rates coming down at the front end. Okay, I'm going to leave it there, guys. As I say, probably the main one to be looking out for, apart from any Trump headlines, is going to be the PMIs, which we're getting out of the US at 9:45. Thank you, and take care, and have a great weekend.